I'm going to use these two depicted diagrams to explain how a fair value gap acting as a support can turn into an inverted fair value gap and then act as resistance. Here on this first diagram, we see a fair value gap acting as a support to push prices to this point of interest. And when price violates the same fair value gap on the second diagram, we see that the fair value gap has turned to inverted fair value gap, now serving as a resistance because we see price resisting at the inverted fair value gap. So here we have a fair value gap and we have a point of interest, and we see price acting as a support on this fair value gap. Now we see price has started reversing from the point of interest, and we also see price reacting on the same fair value gap, which tells us that this fair value gap is a strong fair value gap. Now we see price has violated the fair value gap. As soon as we see price violating this fair value gap, now this fair value gap has turned to inverted fair value gap. You can anticipate price coming back into this fair value gap. So now all we need to do is to wait if price is coming to the area we marked. So now we see price coming into the inverted fair value gap. Price will act as a resistance at this point. All we need to do is to place our sell trade at the fair value gap, and then our stop loss will be above the fair value gap, and then we can target 1:2 or any significant low.